A massive capital rotation is about to begin. Just take a look at the Bitcoin chart compared to the S&P 500. During every U.S. midterm election cycle, the markets have corrected in the second half of the year. We saw it in 2018, and we saw it again in 2022. The main reason is political uncertainty. Investors simply don't know what policies the government will follow next. One possible trigger for another market correction is the growing chance of higher interest rates in the U.S. Although the Federal Reserve kept rates unchanged in July, the market is still expecting 1 or even 2 rate hikes before the end of the year. If that happens, it could put pressure on the S&P 500 and trigger a correction. Now let's look at the U.S. dollar index. During previous midterm election years, the dollar has always strengthened around this period. The reason is similar. Political uncertainty pushes investors to reduce risk and move part of their money into cash. And a stronger dollar usually puts pressure on both stocks and crypto. Now let's look at the data. Historically, Bitcoin has always experienced a correction in August and September during midterm election years. Around the same time, the crypto market has usually formed its final wave of selling before reaching a bottom, followed by a period of accumulation and the beginning of a new uptrend. Now let's move to on-chain indicators. The first one is the realized price. It shows the average price at which every Bitcoin was last moved on the blockchain. During the last 2 market cycles, whenever Bitcoin dropped below the realized price, it marked the bottom of the cycle. Right now, the realized price is around $53,000. Does Bitcoin have to fall to that level every cycle? Of course not, but it's one of the factors I pay close attention to. The second on-chain indicator I use is MVRV. It does a great job of showing periods when most Bitcoin holders are sitting at a loss. Right now, the indicator is still in the green zone, but it's getting very close to giving a signal. That doesn't mean Bitcoin has to crash to $40,000 or even $30,000. In my opinion, even a move below $50,000 would be enough to scare most investors and make everyone start calling for $30,000. And if you're watching this video thinking, I'll just wait for the crash and buy the exact bottom, that's probably the biggest mistake you can make. Nobody can consistently buy the exact bottom, just like nobody can consistently sell the exact top. The best strategy is dollar cost averaging. Instead of trying to time the market, you buy gradually as the price moves lower. One helpful indicator is the 200-week moving average. Whenever Bitcoin trades below it, you can slowly build your position. Then, as the market moves higher, you can gradually take profits the same way. Now, let's look at Ethereum. On the chart, we can clearly see 3 major waves of decline since the middle of 2025. Each wave has been weaker than the previous one. The red candles are getting smaller, and the selling pressure isn't as strong as it was before. But that's still not enough to confirm a reversal. If Bitcoin is likely to move lower, Ethereum probably won't be able to rally against it. Most likely, it will also make new lows. And that's exactly where I'll start buying. For me, anything below $1,400 is a buying zone. My friends, if you want to trade, use my registration link for the BitTunix exchange. You will get excellent conditions for trading, 25% discount on trading commissions, and a welcome bonus for new users. The link is in the description below the video. Thanks for watching, everyone, and I wish you all massive profits.